Yes, what's up, guys? So, so. Let's get into it, straight into it. So, this is GBP USD. I was looking at it 15 minutes or 20 minutes before, and I see that it completely dropped. So, this is where I left it yesterday. Yesterday was the 23rd of June, right? 23rd of June. Okay, let's quickly analyze this chart real quick. So we saw this yesterday, it was reacting to interesting levels, so it touched it, went up there, went down here, went up there, down, 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 consolidating a little, it was consolidating for a long while, it went up, broke past this level, came down, and then boom, full momentum candle, that's a full bearish candle. So obviously that's not something that you just see like on a chart. That's not something that I don't want to say is supposed to happen. I don't want to say that. Yeah, definitely don't want to say it's not supposed to happen, but because the market can do what it wants to do, but there was no indication here. Okay, there was an indication, here that the market was reversing right here. But the fact that it broke through this level, this trend line, and this resistance point here, so it had several support zones. So there was the support zones here, support zones there. So it broke past that support zone. Look, crazy dangers of forex trading. Anyway, so it can only mean one thing. So what happened? Basically, dollar inches down, sterling steady ahead of Bank of England meeting. So Bank of England, the dollar dipped on Thursday, having spent the week gradually edging away from 2-month highs hit after the US Federal Reserve surprise hawkish shift at its meeting last week. Currency markets were quiet as traders weighed up different signals from Federal Reserve officials on the timing of a withdrawal of monetary stimulus. The dollar index was down 0.1% at 10:23 GMT, having pared back after some gains after hitting 2-month high of 92.408. The euro was a touch higher against the dollar, up 0.2%. So something happened with the Bank of England. I think the rumors are is that they lowered the interest rates. Those are the rumors at the moment. I don't understand. I don't understand why it dipped that much. Okay. There's a couple news articles I can read. Let's check them out. FX Street. The British pound came under strong bearish pressure with the initial reaction, and GBP USD lost more than 50 pips in a matter of minutes. As of writing, the pair was down 0.23% on a daily basis at 1.3927. Key takeaways from the policy statement as summarized: MPC votes 8-1 to maintain gilt. Gilt purchase target. MPC votes unanimously maintain corporate bond purchase target. So leaves policy settings unchanged as expected. But why does that dip past 50 thingies? Because that's the same news as what the US Federal Reserve gave. They left things unchanged. So I don't understand why. Banks also revised their expectations for the level of UK GDP in 2021 by around 1.5 since May report, as restrictions of economic data have eased. Let me check DXY. Maybe it's DXY. What happened yesterday? So June, then touched here, came down here, broke up. So it clearly wasn't because of the US. Well, the US helped definitely when it pushed up. So that because it broke past this level, came back down, retested it, broke past it, retested that support on the red line, and then broke past the resistance again. So it's now in the now it's now on a bullish trend. And then GBP USD, it just doesn't make sense. It doesn't make sense. There was legit no warning here. You have to go back just a little bit and just do candle by candle. Candle by candle, just one candle by candle. Look at it, it's going normal. Cool. Okay, it's going up. Okay, so it's going down gradually. I guess you can see a doji there, and then moving averages across and over. But then look, bullish engulfing. So it's not like there's a sign that it's gonna go down. No sign just yet. And then boom, breaks past that level real quick. Moving averages crossover. And then boom, 12 o'clock. Big bearish engulfing. The reason it annoys me a little bit is because how would you know? How do you know when to get in, when to get out? There's no like real. Okay, when did the movers have the crossover? Okay, so the moving average crossed over. Obviously, I'd want to get in for a sell here. Sorry, I'd get in for cover my loss if I was on a long position. So maybe I'd get out here, but still, like. Because your stop loss would be here, right? Below this line. So you had 2 minutes to react to this. Probably even less than that. Bank of England sees high inflation peak, but plays down risk to economy. Bank of England has raised its expectations for inflation, but reiterated its view that coronavirus crisis-linked spike in price rises of recent months does not represent a looming crisis for the economy. Minutes of the latest meeting of the bank's monetary policy committee, which left interest rates unchanged at COVID-19 pandemic low of 0.1%, showed expectations of GDP growth in current second quarter had been revised higher by 1.5%. Okay. The UK is always messing up with their economic policies. They don't know. They're terrible when it comes to it. Bank of England rejects interest rate rise despite inflation worries. Even before I go into trading, I always knew the British economy wasn't as strong as other economies. Bank of England leaves interest rates and QE stimulus unchanged, but how does that affect? Maybe it's just the rumours that inflation has risen basically. On spot, rising inflation puts Bank of England on spot. Most dangerous policy challenging. Okay. With the world's look at that. With the world's fifth largest economy bouncing back sharply from its near 10% plunge last year, Haldane has said that the British Central Bank is facing its most dangerous policy challenge in almost 30 years. Crazy. But investors are watching to see if any monetary policy committee members join chief economist Andy Haldane, who is likely to vote again to scale back the bond buying program at his final meeting before leaving the BOE. The thing is, it's not looking good for the UK because the thing is, we're still in lockdown for number one. The economy is not fully open. The economy is not fully open. We're in lockdown till till July. They pushed it back. Yeah, it's looking a bit ridiculous at the moment. I think that's why investors are not investing in the GBP, because the GBP it's just one. It's one, especially if we've left the EU. Like it's just one. It's one currency that many people would not invest in long term, because there's no positive signs that anything good is happening at the moment. I'm sorry I keep going into this. I know I should be looking at other stuff, but I don't know. It's not good for the UK, is it? It's not good for the UK. Monetary policy somewhere. Usual, more hawkish than expected. Is good for currency, released monthly. It's among the primary tools that the MPC uses to communicate with investors about monetary policy. It contains cool. Bank rate maintains at 0.1%. Expecting GBP strength out of BOE. The Bank of England puts the pound in the spotlight. So relatively busy. I don't know. We need 2% inflation target, so it's not good. It's not good at all. Scary. Dangerous inflation rise. Inflation risk in the UK. Chief economist Andy Haldane said on Wednesday that Britain was at a dangerous moment as he warned of inflationary pressure that might force the central bank to turn off the tap of its huge monetary stimulus. Haldane, who last year warned against the self-defeating economics of fear, said the beast of inflation was never dead and that Britain risked a wage price spiral reminiscent of the 1970s and 1980s. That is not good. In my view, this is the most dangerous moment for the monetary policy since inflation targeting was first introduced into the UK in 1992 after European exchange rate mechanism debacle. Haldane, who is due to leave the BOE after its monetary policy meeting later this month, cast a low monetary policy committee vote in May to reduce the size of the central bank's bond buying program. If wages and prices begin a game of leapfrog, we will get the sort of wage price spiral familiar from 1970s and 1980s. Crazy. That's not good. That is not good at all for the British pound. That is not good. If I was an investor, I would have taken my money out of GBP, I wouldn't have invested in it because when you look at the long-term trend, it was going up. Look, it's going up. Going up. It's going up for a very long time, since 2020. So it's been good for the British pound against the US dollar, but now it's dropped a lot. Crazy. Okay, I don't want to focus on this too much right now, but that's just something to consider right now. Okay, interesting. Gold, I don't want to touch gold, still need to back test it. You know, I haven't got enough experience with gold to even attempt to guess where it's going. Oh, okay, so I put a little alert down here saying looking for short positions. Okay, fair enough. GBP, JPY. Let's look. Touch, touch, touch. Go up, touch, go down, up. Yeah, at this point I feel like I need to backtest a little bit more. I don't see any. Yeah, GBP went down with JPY as well. It's not looking good. I need to backtest a bit more. Start with clean charts as well. Okay, yeah, I don't think I'm going to trade today. I'm not feeling too confident trading because my pairs are GBP pairs. And obviously my trading plan says stay away from pairs where there's news. The news is affecting it, so yeah, it's best if I leave it right now. Maybe today I'll focus on just back testing. Yeah, I think I'm gonna leave it today. That's the end of the video. My main pairs are GBP or GBP, JPY, GBP, USD. I'm not experienced enough of gold, so I think it's time to take a break for this for now. Alright, see you guys in a bit.